Ever wondered about the world of alternative investments? Let's unravel this financial terrain together. Picture a landscape vast and varied, filled with opportunities for growth. That landscape, my friends, is the investment world of today. The investment landscape is a spectrum stretching from traditional to alternative investments. On one end, we have traditional investments. They're the old guard, the tried and tested. These are your stocks, your bonds, your cash equivalents. Stocks represent ownership in a company, while bonds are essentially loans that you give to companies or governments with the promise of repayment with interest. Cash equivalents are short-term, highly liquid investments that are easily convertible to cash. But the investment world doesn't end there. Far from it. Venture further and you'll find a whole new terrain under the banner of alternative investments. Now, if you're scratching your head and wondering, what exactly are these alternative investments? Well, you're not alone. Alternative investments, in simple terms, are financial assets that don't fall into the conventional categories of stocks, bonds, or cash. They're the road less traveled in the investment world, offering the potential for higher returns. But they also come with their own set of risks and challenges. Alternative investments include a wide range of options like real estate, commodities, hedge funds, private equity, and even things like artwork and fine wine. They're a bit like the Wild West of the investment world, less regulated, more volatile, but potentially more rewarding. In essence, the investment landscape of today is a diverse arena offering a plethora of opportunities for those willing to explore, understand, and navigate it. It's a world that goes beyond stocks and bonds, a world where the savvy investor can find unique ways to grow their wealth. Now that we've set the stage, let's delve deeper into the world of alternative investments. So what exactly are alternative investments? Well, let's dive right in. Alternative investments are financial assets that don't fall into the conventional investment categories like stocks or bonds. They're a little bit like the black sheep of the investment world, marching to the beat of their own drum. And just like any black sheep, they come in all sorts of unique and interesting forms. Let's start with real estate. This can be anything from a swanky penthouse in New York to a humble suburban home in the Midwest. It's all about buying physical property and either renting it out for a steady income or selling it on for a profit. Then there are commodities. These are raw materials or primary agricultural products that can be bought or sold, such as gold, oil, coffee, or wheat. They're like the building blocks of the world economy, and investing in them can offer a hedge against inflation. Next up, we have hedge funds. These are pooled investment funds that use a variety of strategies to earn active returns for their investors. They're a bit like a team of financial ninjas, always on the lookout for the next big opportunity. Private equity is another type of alternative investment. This involves investing directly into private companies or buying out public companies to make them private. It's a bit like being a financial fairy godmother, helping companies grow and prosper away from the public eye. And last but not least, there's venture capital. This is money provided by investors to startups and small businesses with perceived long-term growth potential. It's a bit like betting on the underdog with the hope of big payoffs if they make it big. Alternative investments are often used to diversify a portfolio or seek higher returns. They're a bit like the spice in a financial recipe, adding flavor and depth to your investment mix. Understanding the types of alternative investments is key. Next, we'll see how they compare with traditional investments. How do alternative investments stack up against traditional ones? Let's dive into this comparison, beginning with the most familiar traditional investments. These typically include stocks, bonds, and cash or cash equivalents like treasury bills. They are the backbone of most portfolios and are generally considered safer due to their long history and the extensive regulations surrounding them. On the flip side, alternative investments include a broad range of assets, such as real estate, commodities, private equity, hedge funds, and even collectibles. These are less regulated, and they often require higher minimum investments, making them less accessible to the average investor. Risk and return are two fundamental factors to consider when comparing these types of investments. Traditional investments like stocks and bonds offer a wide range of risk and return profiles. Stocks have the potential for high returns but also come with higher risk, while bonds offer lower returns but with less risk. Alternative investments, on the other hand, have the potential for high returns, but they also carry high risk. These investments are less predictable and can be affected by a multitude of factors that may not impact traditional investments. Liquidity is another crucial factor. Traditional investments are typically highly liquid, meaning they can be easily bought or sold. This liquidity allows investors to move in and out of positions quickly, providing financial flexibility. Alternative investments, however, are often less liquid. Real estate, for example, cannot be sold at the click of a button and may take months to sell. This lack of liquidity can be a drawback for investors who need quick access to their funds. Diversification is another point of comparison. Traditional investments offer opportunities for diversification within the asset class. For instance, within stocks, one can invest in different sectors, such as technology or healthcare. With alternative investments, the diversification benefits can be even greater. Because they are not tied to the performance of the stock or bond markets, they can provide a buffer against market volatility. For example, the value of a real estate property might remain stable or even increase during a stock market downturn. However, it's important to note that alternative investments often come with higher minimum investment requirements. This can make them less accessible to the everyday investor. Moreover, they are often less regulated than traditional investments, which can lead to increased risk. In the end, both traditional and alternative investments have their own set of advantages and drawbacks. Traditional investments offer liquidity and regulation, while alternative investments can offer high returns and diversification benefits. As we can see, alternative investments offer a different risk and reward profile compared to traditional investments. It's essential to consider these differences when building a diversified investment portfolio that aligns with your financial goals and risk tolerance. Why might an investor consider alternative investments? This is a question that's been on the minds of many, and for good reason. Alternative investments can play a significant role in your portfolio, offering several benefits that are worth exploring. First, let's talk about diversification. When you hear the word investment, stocks and bonds might be the first things that come to mind. They're familiar, they're comfortable, but they're also just two pieces of the financial puzzle. Alternative investments, on the other hand, include a wide range of assets like real estate, commodities, hedge funds, and private equity. By broadening your horizons beyond traditional investments, you're spreading your risk across different types of assets. This diversification can help buffer your portfolio against the ups and downs of the stock market. Secondly, alternative investments can potentially offer higher returns. While it's true that with greater reward comes greater risk, certain types of alternative investments have the potential to outperform traditional stocks and bonds over the long term. For instance, private equity investments can offer significant returns if the companies they invest in do well. Similarly, real estate can provide a steady stream of income through rental payments, as well as potential appreciation in property value over time. Thirdly, alternative investments can serve as a hedge against market volatility. Traditional investments like stocks and bonds are directly tied to the market's performance. When the market goes up, they generally go up too, and when it goes down, they usually follow suit. Alternative investments, however, tend to have a low correlation with traditional markets. This means they might not be as affected by market swings, providing a degree of stability in turbulent times. But with all these benefits, it's important to remember that alternative investments also come with their own set of risks. They can be less liquid than traditional investments, meaning they might be harder to sell when you need cash. They can also be more complex, requiring a deeper understanding of the investment and its underlying assets. Moreover, it's crucial to understand your own risk tolerance and investment goals before venturing into the world of alternative investments. If you're a risk-averse investor looking for stable, predictable returns, alternative investments might not be the right fit for you. On the other hand, if you're willing to take on more risk for the potential of higher returns, and you have a long-term investment horizon, alternative investments could be a valuable addition to your portfolio. In conclusion, alternative investments can play an important role in a well-rounded portfolio, providing diversification, potential for higher returns, and a hedge against market volatility. However, they're not for everyone. It's essential to understand your own risk tolerance, investment goals, and the unique risks associated with alternative investments before diving in. Alternative investments can play an important role in a well-rounded portfolio, but they're not for everyone. What should you consider before diving into alternative investments? As alluring as the world of alternative investments may seem, it's not without its risks and considerations. One of the most prominent challenges is the lack of transparency. Unlike traditional investments, alternative investments don't always provide clear insight into their operations or financial health. This opacity can make it difficult for investors to assess the true value and risk of their investment. In addition to this, alternative investments often come with higher fees. These can take the form of management fees, performance fees, or even hidden costs that aren't immediately apparent. These fees can quickly eat into your potential returns, making these types of investments less profitable than they may initially appear. Let's not forget about the potential for loss. While it's true that alternative investments can offer higher returns, this potential reward comes with a higher level of risk. It's entirely possible to lose a significant portion or even all of your investment. This is particularly true in volatile markets or with investments that rely on high levels of leverage. That's not to say that all alternative investments are bad, far from it. They can offer diversification, potential for higher returns, and a hedge against market volatility. However, it's essential to do thorough research before diving in. Understand the investment strategy, the risks involved, and the fees you'll be charged. Even with thorough research, the complex nature of these investments means it can be beneficial to consult with a financial advisor. They can provide professional insight, help you understand the risks, and guide you towards investments that align with your financial goals and risk tolerance. So, when you're considering alternative investments, don't be dazzled by the promise of high returns. Instead, look beneath the surface. Ask questions, do your research, consult with a professional, and always remember, higher potential returns come with higher potential risks. Before diving into alternative investments, it's crucial to understand the risks and do your homework. So, are alternative investments right for you? It's a question that, after our journey today, you might be closer to answering. Let's take a moment to revisit some of the key points we've discussed. We started by exploring the vast landscape of investments, where we introduced the concept of alternative investments. These are non-traditional assets, distinct from the well-trodden path of stocks, bonds, and cash. They encompass a wide array of opportunities, from real estate and commodities to private equity and hedge funds, even extending to collectibles and cryptocurrencies. We then delved into a comparison between alternative and traditional investments. While stocks and bonds are more familiar to most, alternative investments can offer a tantalizing prospect, the potential for higher returns. But remember, with greater reward often comes greater risk. This brings us to the role of alternative investments in a portfolio. These types of assets can provide diversification benefits, a way to spread your eggs across multiple baskets. They can also act as a hedge against market volatility, providing a potential buffer in times of economic uncertainty. However, it's not all smooth sailing. We also discussed the risks and considerations of alternative investments. These can include higher fees, less liquidity, and increased complexity. It's crucial to understand that these investments are not a magic bullet, and they certainly come with their own set of challenges. And so, we circle back to our original question. Are alternative investments right for you? The answer, as is often the case in finance, is it depends. It depends on your individual financial goals, your risk tolerance, and your willingness to venture into less charted territory. In the world of investing, knowledge is power. Whether you choose traditional or alternative investments, make sure you understand what you're getting into. Remember, your investment journey is uniquely yours, and the decisions you make should reflect your personal circumstances and aspirations.